Welcome to the breaking news for November 27th, 2020. My name is Lee Reams, and I'll be your presenter today. And this is going to be a short thing about the new final 1031 regs. And so for a little background here, the IRS and Treasury have released final regulations related to the definition of real property for the Section 1031 like-kind exchanges. The Section 1031 originally provided that no gain or loss is recognized where a business or investment property is exchanged for a like-kind property. Then along came TCJA and modified that Section 1031 for exchanges after 2017 by limiting the tax-deferred exchanges to only real property. And that raised questions of what was included in the definition of real property. So while most would believe that it would be a simple definition, as we have come to expect, nothing in taxes is simple anymore, if it ever was. So in June of this year, the IRS issued proposed regulations to define real property for the purposes of Section 1031. The final regulations issued November 23rd define the real property to include land and, generally speaking, anything permanently built on or attached to the land, and also includes anything that is characterized as real property by the applicable state or local laws. Some intangible property like leaseholds and easements will also qualify as real property. A stock in a cooperative housing units or corporation is also real property under the final regs. So the final regs also clarified that for tangible property permanently affixed to real property for an indefinite period of time, the property comes inherently in permanent structure and is therefore real property for purposes of Section 1031, which opens up some interesting possibilities here. Anyway, an inherently permanent structure is defined as to mean any building or other structure that is in a distinct asset and is permanently affixed to real property and will ordinarily remain affixed for an indefinite period of time. The regs give several examples of inherently permanent structures, including in-ground swimming pools, fences, paved parking areas, and more. Then it also has an incidental property rule, and that addresses the receipt of personal property that is incidental to a taxpayer's replacement real property in an exchange. Real property is incidental to real property acquired in exchange if, one, in standard commercial transactions, the personal property is typically transferred together with the real property, and two, the aggregate fair market value of the incidental property transferred with the real property does not exceed 15% of the aggregate fair market value of the replacement property. The 15% limitation is calculated by comparing the value of all incidental property to the value of all replacement real properties acquired in the same exchange. The real property definition provided in these regs is only for Section 1031 and does not extend to other parts of the code, such as for depreciation, Section 1245 or Section 1250. Of course, this is only an overview of the final regulations, which are in excess of 100 pages. So if you're into Section 1031 exchanges, you probably should review the regs in detail. But this gives you a little idea of what they include is defined as real property in a 1031 exchange. Well, that'll conclude our little quickie update. So we'll see you next time. Take care.